Investing in stocks is one of the most common ways to build wealth, but not all stocks perform the same way. Two major types of stocks investors choose between are dividend stocks and growth stocks. While both have the potential to provide returns, they differ in how they generate profits, risk levels, and ideal investor profiles. Let's break down both types and compare them across key factors. What are dividend stocks? Dividend stocks are shares of companies that pay out regular cash payments, dividends, to their shareholders. These payments typically come from the company's profits and are distributed quarterly or annually. Dividend stocks are often issued by established, stable companies that have a history of steady earnings and shareholder payouts. Key features of dividend stocks: pays regular dividends, providing passive income. Lower volatility compared to growth stocks. Often belong to mature industries such as utilities, consumer goods, and banking. Typically have slower price growth, as profits are shared with investors instead of reinvested. Best for long-term investors seeking income and stability. What are growth stocks? Growth stocks belong to companies that are expected to grow at a faster than average rate. These companies usually do not pay dividends because they reinvest their earnings into expanding the business. Growth stocks tend to belong to sectors such as technology, healthcare, and e-commerce. Key features of growth stocks: no or low dividends, as profits are reinvested for future expansion. Higher potential for stock price appreciation, leading to capital gains. More volatile, meaning they can experience sharp price swings. Best for investors looking for long-term capital growth rather than immediate income. Common in emerging industries and fast-growing markets. Which one is better? Choose dividend stocks if you want a steady stream of passive income. You prefer less risk and price stability. You are retired or close to retirement and need regular payouts. You value financial security and established companies. Choose growth stocks if you are willing to take on more risk for higher potential returns. You are investing for the long term and don't need immediate income. You believe in emerging industries with high growth potential. You want your money to compound over time through stock price appreciation. Conclusion: both dividend and growth stocks have their advantages depending on your investment goals. Dividend stocks are ideal for conservative investors looking for income and stability, while growth stocks are better for those willing to take risks for higher long-term gains. Many successful investors build portfolios that include both, balancing income and growth potential.